So welcome to the 808th meeting of the Economic Club of New York. I'm Barbara Van Allen, President and CEO of the club, and I'm delighted that all of you were able to join us today. I'd like to start by welcoming students joining us virtually from Mercy University and the CUNY Graduate Center, as well as members of the 2025 class of fellows. The Economic Club is delighted to stand as the nation's leading nonpartisan platform for discussions on social, economic, and political issues. And we've been doing this for over a century. And of course, that tradition of excellence continues through to today, where I'm pleased to be able to welcome our guest and fellow club member, Philippe Laffont. Philippe is the founder and portfolio manager of Coatue, where he leads the firm's public and private investing businesses. Prior to founding Coatue in 1999, Philippe was a research analyst at Coatue Management, where he focused on the telecommunications sector. He started his career as a management consultant at McKinsey & Company and spent several years as an independent consultant. Philippe graduated from MIT with a BS and MSc in computer science. Today's format will be a conversation, and we're honored to have fellow club member and former club vice chair, Glenn Hutchins, as our moderator. Glenn is co-founder and chairman of North Island Ventures. As a reminder, today's conversation is on the record. Members of the media, both in the room and online. The program will end promptly at 1. So without further ado, please welcome Philippe and Glenn. Thank you.
Is this where it's working? So Travis Scher right here is founder of North Island Ventures. My firm's North Island, just so you know, but I'm his chairman for his sins. Barbara, I want to thank you for having us here today. And I also want to compliment Barbara Van Allen. The Economic Club has been enormously successful under her leadership. How long have you been doing this? 9 years. I had the great fortune of serving on her search committee and part of the group that picked her, so I'm taking full credit. But Barbara, thank you everything you've done, and particularly nursing, not only the organization through the pandemic, but she actually found a way for it to thrive using video streaming technologies and virtual meetings and new kinds of memberships and access. And it was really like a lifesaver for a lot of people during the pandemic, and then came out much stronger. Well done, bravo. Philippe, welcome to the Economic Club in New York.
Hello.
I had the misfortune of sponsoring him for membership. But great to have you here. Thank you for doing this, my friend. As Barbara said, you got your start at Tiger. One of the first audience questions for today was, tell us about that. What was that like? What did you learn? And what was it like working for one of the greats in the industry?
Julian was a mesmerizing person. On one hand, yes, he was demanding, and tough, but he just got the best, out of you. And I think he had that southern drawl. I had even more of a French accent than I do now. At times, he didn't understand what I said. I didn't understand what he said, and I think that's why we got along so well.
I've always found the key to his relation with Philippe is ignoring what he has to say.
Yes. And he also would cut through the bullshit so fast. And he started the business at age 50. So I probably got there, he was in his 60s, and we would present a long memo with a deep model. And he just like flipped through the memo like this and says, hey, you know what? That number, the earnings in 2000 or 1998, they're wrong. I'm like, what? The guy barely read my memo. And that's what he was just great at. He would just abstract every story. And he said, only simple stories are good stories. He really believed in CEOs and the personal relationship that he had with these leaders. And it was just a fabulous time. He also gave a lot of responsibility to young people. He would try to hire athletes. I've also tried to hire athletes. It didn't seem to work for me as well as him. He had just this nose around finding great people, and it was really fun to be there.
And is that how you got your start as a technology specialist?
Yes, I started a bit in like the telecom and media, which at the time was sort of like the tech. Tech has now morphed to be a bit more exciting, telecom and media less. But I started there, and luckily when I arrived, things were going up. And
Right.
then I left very fortunately, right before they sort of fell down.
The dot-com collapse?
The dot-com. And
Right.
so that was a bit how I sort of learned the business.
Yeah, Philippe and I started our business roughly the same time, which is how I remember kind of the timing of that. So Coatue, tell us a bit about, before we get into different kind of tech themes, which we'll drill down a little bit today, but give us the context of, what your strategy, how you started the firm, what your strategy is, what your asset classes are now. Kind of just give people a sort of thumbnail sketch of the organization.
So when I left Tiger, I must say, maybe I didn't even leave of my own volition.
Let's not get into that.
I was like, wow, what am I going to do? I'm here in the US. I don't even really have a work visa. So I was like, well, I'm going to become an entrepreneur.
By the way, he's a citizen now. Don't worry.
Yes. Thank God.
Don't worry.
Based on
no tweets, no X's here.
Yes.
He's a citizen.
And so I'm going to start the business. I got to go raise some money. So I put a little bit of money that I had. My family put a tiny bit. We rounded up a few $1 million. And then I said, well, I have a lot of friends. I'm going to ask them for some money. And I think I got like 3 million from the sum of all my friends, which made me think either they don't trust me or they don't have any money. And so I'm like, wow, what do I do? And what's incredible in the US is you meet some people and they just give you money. And I remember I went to Chicago, I met this guy, and he takes me a half hour late. And after 3 minutes, he's like, Philippe, you know what? I've heard enough of your speech. I'm busy. See you later. And a week later, I get $4 million check in the mail from that guy. And so you get these remarkable story. And obviously, I love the US from before, but I never forget how much people give you a chance here. So we start with like 50 or so $1 million, and then it's January 1st, 2000. And after 1 month, it's February 1st, 2000. I'm up 20%. I'm annualizing my monthly returns. I go, wow, this is going to be pretty easy. And then the NASDAQ went from 5,000 to 900. But I
remember that well.
Yeah. And in retrospect, that's the best lesson. Julian was the first best lesson. Second best lesson is you start in a tough market. You remember how hard what we do is. And fast forward today, we've gone from 50 million to 50 or 60 billion, and hopefully we'll just keep growing the business.
I remember you barged into my office one day, and someone saying, Philippe Laffont's out to see you, and I said, tell him I'm busy. What's he doing at my front desk? He said, he's got one word for you. I said, what's that? He said, Apple. I said, all right, bring him in. Let's talk. So you made a big bet very early on Apple, right?
Yeah.
And a lot of the things you invested in were sort of around that theme, right? In the early 2000 time period, right?
Yes.
iPhone was introduced in 2007, iPad in 2009. Am I right about that?
You're always right, Glenn.
No, thank you.
But you're not right about one aspect of this story, which is before I came to Glenn's office, we met in Miami at JP Morgan. We became fast friends over lunch. And soon thereafter, we spoke about a merger between Silver Lake.
I was going to bring that up, but that's right.
And Coatue, and I'm sorry to bring it up.
Okay, I made a mistake. I didn't pay a high enough price. I apologize.
I remember we were going to get 14%. And I was like, God, So anyway, we kept going, but we stayed incredible friends, which is a testament to your friendship. And Glenn is a godfather to one of my kids. And even though we didn't agree about that, I think we agreed about just about everything. So I came back, and behind the story of Apple, I think I've only had 5 or 6 really great ideas. We call them BFIs.
Right.
The B is big, the I is idea, and you can figure out what the F is.
Featured.
And we only had 5 or 6 of those ideas. we latched on to Google and the IPO.
Right.
And if you remember, people said, this is crazy. It's a reverse Dutch auction. It's such an expensive stock. If you had bought Google in 2003, you would have paid 0.5 times PE on your 2025 earnings. And so I always remember a great way to think about tech is, can you buy stocks at one-time earnings many, many years out? And how many years it takes is almost irrelevant. You latch onto these great companies. So we latched onto that. And then in 07 or 08, first Apple came out with the iPod just for the
I'm
music.
going to contextualize this. People might remember what happened in 08. Right. It was not a time period when people were feeling relatively frisky with their money. And Philippe is.
And we had missed the music player, the iPod.
Right.
But when the iPhone came, I actually said, shit, this one's important. I'm going to go to San Francisco. And one of the great misses in my life is I never met Steve Jobs.
Right.
Even though after MIT, thinking I would be a great destined for great computer science, I had 5 job interviews at Apple and I got 5 rejections. So I never met Steve, but I went when he presented the phone, and you could tell it was going to be a big idea, and it was obvious. And big ideas are always obvious. And it was, if the phone has no keyboard, it's twice the size of the screen, and you can have it in portrait mode and in landscape mode. And that was it. That was Apple. Everything else came. And Steve always said, I never asked if people should have a keyboard or not, because you don't ask people, you show them the best product versus ask for their opinion. Subsequent to Apple, we've had a couple big ideas.
They don't know what they want until I show it to them.
Correct. It's exactly right.
Yeah, that's what he used to say. No market research.
And so we've had a couple other big ideas. We've also had some missed ideas. When the cloud and SaaS came, I was late, and our fund suffered for that for a while. And so I think in the investing life, at the end of the day, there's a few big ideas, but they're like onions, and you peel 1,000 layers, and you come with a lot of new ideas.
So a couple of years ago, you'll know exactly when. I remember the presentation you did when you made the call on a company called Nvidia. And that was about, when it was about, what, 20% of its value today?
22.
2022.
Yeah, it was in 2022. It was a fraction of what it is today. And
I think it's up 5x, 4 or 5x since then.
yeah, maybe more. I don't even want to remember. But what was interesting is during COVID, we did well. And then after COVID, there was a period with inflation and stuff. And at one point, we were like 70 or 80% in cash. I felt I'd lost enough money. And one thing that's really important, what we do is, if we do lose money, at some point, we always raise cash, because then I always know I've got another day to fight. And I know in the private equity, it's different, because once you own an asset, you own it. But in my case,
the difference is you can also manage it. You can control the cash inside the business and its spending. So you have a different tool for the same purpose.
And we were just, and we are mark to market on a daily basis, and mark to market matters. There's pros and cons to it. So I was 80% cash, and people say, my God, how did you figure out to get out of cash and back into the market? And it was NVIDIA. And one of our analysts who's probably here today came up with the idea of NVIDIA, and we're like, wow, maybe that's a BFI. And the basic concept behind NVIDIA is that
this was 3 years ago now.
And to think it was only 3 years ago. Nobody knew about NVIDIA before, and today it's the largest market cap in the world. I actually think, Glenn, probably back when I pitched it, NVIDIA was 100 billion, 200 billion, 200 market cap, and today it's 3 trillion.
Okay, 15.
So 50 next. Isn't that
I
amazing?
was a little off. I was off by a factor of 4.
He's from Harvard and I'm from MIT. We both agree. He tells a better story, but I've got the facts.
Yeah. He does numbers, I do words.
Exactly. And so it's really amazing. But behind it, if you think of a CPU is like a little dumb calculator. And then with the networking, we assembled a lot of dumb calculators together. A GPU is more like a brain cell, and all those fiber connections. Right now, we have GPUs that at times can be connected to tens of thousands of other GPUs. The fiber is like the synopsis. And what's so fascinating
Synapses.
is synapses.
That's
There
with
you
an
go.
A,
The Harvard
synapses.
guy.
Synapses. Just saying. I can
Um,
translate. I also speak French, so I get both.
And so we're reinventing this computer fabric, and it's more mimicking like how human brains work.
Right, yeah.
And so that was the story.
Ironically, it was that architecture was designed for graphic rendering. That's the graphic.
40
computer.
years ago.
Yeah,
or
exactly. Yeah,
something.
yeah.
So
Okay, so fast forward to today. That and what you didn't say, which is obvious, but just want to make sure that was it. It was NVIDIA was part for you of an overall AI thesis. It was the key thing you saw as a way to play the AI trend that you identified 3 years ago. Correct?
correct. And in
Yeah.
fact, our understanding of the AI at times is a little rudimentary. And so one lesson learned, I was thinking today, like lessons that I've learned over a long time, and some of which I've learned the hard way, is there's so much value to putting a tiny little amount of capital. And I define capital as either your money or your time. Different people. Some people have no time and a lot of money. Some people have more time, less money. Some people have both. But you always have a little bit of time behind new ideas. And this AI came out. There was these model transformers, this, that. And I'm like, why did I not try to spend a little bit more time back then? 10 years ago, you were speaking to me about it. This Bitcoin came out.
Mhm.
Why did I not spend?
We'll get back to that.
Sometimes you get so busy just with the obvious, the big ideas. You have to leave a little space of your calendar to go to crazy conferences, to go to some conference sponsored by Twitter or TED or South by Southwest. Some of these haven't even gone, but today I went to the Coinbase conference and spoke about it, and they're talking about stable coins and tokenizing. And I'm like, maybe we should tokenize our own products now and stuff like that. And so anyway, that's a small lesson that I regret.
But I'm going to take it aside here and then come back to the AI. But there's a book that you read that gives you sort of a guidance on it. It's about growth. What's the name of the book? You know what I'm talking
The Growth Mindset.
The Growth Mindset.
Carol, professor at Stanford, amazing book. I've only had 2 books that have really sort of marked my investment career. One is Engine That Moves Market. I've talked about it in the past, but it's fascinating, and it explains how trains put the canals out of business, the canals put the horses out of business, then the cars and the trucks sort of affected a lot the trains. And then anyway, it's a history of the stock market, and you just realize that what's going on today was exactly the same in 1900 and 1800.
Some research Philippe's done was very interesting. It shows that the Mag 7 concentration that we have today has been more a characteristic than not of the markets over 150 years ago. That the next industry of that's creating value concentrates the value in the stock.
Correct. There was a time where railroads was like 60% of
Before
the stock
that, it was
market
real
in the
estate,
US.
right?
Then there was real estate. Then there were financial companies. Then there were industrial companies.
Nifty 50.
Now it's tech
Now
companies.
it's tech companies.
So
So what we see today, everybody says, oh, isn't this unusual? One of my rules is every financial crisis, half the people who were on Wall Street weren't there for the last financial crisis. Everybody says, well, this is there are some things that are true through cycles. And one of them is stock market gets concentrated around the growth sector of the market, because that's where money capital wants to be, right? So speaking of which, what's your favorite public stock in the AI space right now?
So I knew you would ask that. And
Because he told me to.
given that the press is around, my answer is a stock answer, which is I'll always give you 2 or 3.
Right, good.
I increase the chances that you'll forget the bad one and you'll remember the good one. I would say thinking about AI very broadly in terms of thinking, fine, we're going to get this new infrastructure, but for instance, does this infrastructure need to be powered by nuclear energy or solar energy? Or what about gas turbines? And once we have that infrastructure, what do we do with it? And what's going to happen to the cloud providers? And are there going to be new cloud providers? So I know I'm not giving you like exactly tickers and stuff, but I think the way we think about it is more important, which is the core idea is follow the GPU. who is buying NVIDIA and why.
Who is
But-
buying NVIDIA products?
NVIDIA product and why. And NVIDIA is the center of the storm. It's really that absolute core. And then you peel the onion. Could be the energy, could be the infrastructure, could be electric components, transmission. I would have never guessed 25 years ago that we would have to become like expert utility investors.
Mhm.
Right now, and I hate to admit this, I find the utility sector to be so sexy and exciting. Who would have thought that stocks that pay a
I'm not going to get
3%
into that over
dividend
lunch.
yield-
I'm just not going to go there. Sorry.
And so things change, and you have to be able to adapt and really more think like where the puck is going versus where it is. And for us in our style, we're much better off thinking what is going to be the Max 7 in 10 years versus what is going to be the Max 7,
Sure, of
next
course.
quarter
Yeah.
or next year. And when you think about ideas 10 years out, your margin of safety increases dramatically versus having to be right immediately.
So in your privates business, we didn't talk about the structure of your business, but in your privates business, what AI trends are you following? You just talked about now you're
Yeah.
talking about the outward ramifications of the
So
AI.
at the beginning, we have to build the AI infrastructure. Funny enough, this over-indexed to public companies because semiconductor tend to be
Right.
public companies, power and electric equipment tend to be public companies. The first time now, this year, is I feel more like the year of the privates. And if you think who is the equivalent to NVIDIA in the public markets, in the private market, I think it's without a doubt OpenAI. And in OpenAI case, they went from 0 to 100 million users some point last year. I think early this year, there were maybe a couple 100 million users. Today, it's 800 million users.
Yeah, I was just looking at that data. And if you look at the next two are, I think, Claude and Grok, and they're
And
both,
They're
and
both doing great.
but they're both,
They're
tiny.
smaller
right,
and also different utility. So
right.
Claude might be the OpenAI for business. OpenAI might be a model, but with ChatGPT being the emblematic consumer app. And then I also still use Grok, but with Grok, I'm like, hey, what are people saying right now? And that you can only find
Because
on
it's
Grok.
training on the X.
And it
Right.
has that
Tweaks on-
proprietary data.
Right.
And if you especially don't know exactly who to follow and how to distinguish on X what's what, you can ask
That's
a lot of
interesting.
questions for Grok.
So
from
I use
Grok.
Perplexity a lot for what I used to use Google search for.
Oh, Glenn, I'm sorry. Perplexity is for, the people that don't use the first three. No, I'm kidding. Perplexity is amazing because
Right.
it's almost like summarizes a bit of everything.
Yeah. I find it a
So-
very good first entry point for people who don't use. I use
Correct.
OpenAI and the others for more.
And then obviously,
business-related stuff.
Google has Gemini.
Right.
You can jump from there. But I think you think about what can you do with a model? How are doctors? There's a company that now 40% of all doctors,
Right.
and in 1 year, they got 40% of the million doctors. There's 1 million doctors in the US, 40% on. It's becoming like a companion.
Right. A lot of they use it
doctor.
for notes, for
But
charts.
it's not
and-
just notes
right.
and charts. That already existed before. I feel that's a bit more like software for doctors. This is like, these are the symptoms.
Diagnostics.
What's the diagnostic? What
Yeah.
should I do? Hey, give me some advice. This is how I'm thinking. Am I thinking right or not? Show me some scientific research around this subject. Hey, who are some other doctors in the network that I could reach out to and potentially get their advice, right? So I think the AI companion for doctors, AI companion for lawyer, and then one of the most
Yeah.
and biggest use case is AI for programming. And
Of
it's
course, yeah.
exploding.
That's the first huge use case. Yeah,
Correct.
yeah, exactly. Okay, so we go into AI forever. But one other trend you're investing around, would fintech be something you're focused on?
Yeah, I mean, you have to be careful, like you're all in on AI. And usually if I'm all in on AI, it means everybody else is,
Right.
which
Exactly.
means that there's a lot of risks to being in everything that everyone else is. But another little lesson learned is something that Stan Druckenmiller told me, and I live by it all the time. He said, I made 120% of my money in obvious ideas, and I've lost 20% everywhere else. So the concept of being in obvious ideas
Right.
is not bad. And most of the money is made in obvious ideas. But also, obvious ideas are more volatile because everybody else has them. But over the long run, I look at my P&L. I've made more than 100% on obvious ideas, and all the stuff where I was like, oh, I'm so clever, I'm the first one to figure that one out, they end up not working. So there is something about the wisdom of the crowd, but the wisdom of the crowd, it's based on the duration that you can stick to it. So you don't want to be too big. Thus, your good question around what are some other trends. And one thing I've thought a lot about is that technology has revolutionized different sectors, right? One of the sectors that technology has ripped through and shredded the incumbents, they're like little crumbs on the floor now, is advertising. Think about the rise of Google and the fact that probably 50 years ago, traditional media companies, newspapers, TV stations, that was the power. And those are the people who probably 50 or 60 years ago, went to the inauguration. It was funny just to see now all the tech guys, and I don't know if it's a passing or it's a bad omen, it could be interpreted either way. But that would be a sector that's changed a lot, right? I think of financial institutions, and today, the financial institutions, by and large, are still the same financial institutions that existed 10 or 20 or 30 years ago. And some of the names have disappeared, but usually they disappear when one financial institution takes on too much leverage, just gets gobbled up by another one. But outside of that, they're basically the same. It's just the guys that don't use too much leverage, sooner or later gobble the guys, that either use too much leverage or had too much of their business in one particular aspect. But I think of some of these new companies. There's one called Revolut in particular. It's not as big in the US, but it has basically recreated.
I hear a lot about it in Europe.
Oh my God, it's an incredible company. And what it is, it's 10% JP Morgan, 90% American Express, packaged in an app that only requires 1,000 employees on a worldwide basis, versus a large financial institution probably has 500,000 employees. So guess what? What happens when you can offer the same services with 1,000 employees as you do with 500,000? Well, at the end of the day, a big portion of your cost is 1/500th of what it is. And the reason I say a bit JP Morgan and a lot Amex is they're just focusing on services and subscription, where they say, hey, if that business doesn't have a 30% ROA, not ROE, ROA, I'm not even going to get in it. So in essence, it's grabbing all the good fat profit pools.
You pick off the best products.
And you pick up the best products, and then you say, hey, you, the bank, can continue to
You can have all that rest,
just
all the rest of it. And the highly regulated stuff. Highly regulated pieces of
2% ROA, 10% ROE business. So I think finance is going to change. And then just to finish and to show you that I also miss obvious trends, and I'm so mad in retrospect, is think about what happened to Bitcoin, and it's gone from 0 to 2 trillion, and crypto went from 0 to 3 trillion, and it has like 700 or 800 million users around the world. You're like, this is a real trend, and we don't get all the trends right. And so this is a reminder to constantly both search for new trends, but it's never too late to sort of re-establish yourself in an existing BFI.
Good thinking. Okay, so let's move on to some public policy kind of related, or just broader markets related kind of things. I don't know where you want to start on that, but talk first about so the AI as it relates to productivity, jobs, job loss, job sorting, that sort of issues. I know you've got some thoughts about that.
Yeah. So my the moniker I came up with is to say tokens, greater, so much more important than deficits, deficits more important than tariffs. So if you think early in the year.
Okay, do that again.
So I'll start left to right. I'll write tokens.
Then in this case, tokens are not Bitcoin tokens, but AI tokens.
Tokens are AI tokens, and I think
Basically
of
pieces of a
tokens-
word, essentially it's a small section of a word that's
Yes.
how they count what AI.
It's like the atomic unit of AI.
Exactly,
If you think
atomic-
of
what's the best way to put it?
fuel for cars, electricity for computers, tokens for
AI,
models, right?
for models, yeah.
So I got tokens, greater, meaning it's much more important than deficits. Deficits greater than tariffs. Now, I didn't come up with that idea right now. Fast rolled back just a month and a half ago, tariffs come out, market drops 20%, 25% peak to trough. By the way, trick question. In a decade, how often do markets drop 25% and how often do markets drop 50% or more? I'll put you on the spot, but if anyone in the audience wants to guess.
In a
guess.
decade.
Yeah, over a decade. Who wants to take a guess?
5 and 1.
Okay, so the answer is 25% or more.
In a decade.
25% or less.
Or less.
And then one.
I was gonna say 1. So
Big gigantic
only
one. So
two.
you got-
only
yeah.
2 25%.
So-
That's it, right.
20 or 25% drop peak to trough is a lot. It doesn't happen often. And 50 or more.
Which means you got to come back
.com.
a third to get to where you started.
Correct.
Yeah.
.com, 08 was a big one. We think of COVID as being in between a crisis and a correction.
Right.
87 was very deep, but it's also in between a crisis and a correction because it happened so fast. 87 went boom, boom.
Right.
Right? But like the Nifty 50 and what happened in the 70s was a huge one. So anyway, it doesn't happen very often, right? So tariffs came and went. I think that tariffs is a bit more noise. At the end of the day, the world is sophisticated enough that they're not going to be implemented to the extent that Trump starts. There's this word to describe Trump that people mention his taco policies, which is, I think you start with a big bang, but then you're willing to settle way more in the middle than people start. And then we have the deficits, right? And around the deficits, the part that I find is interesting is it's so obvious that the deficits are so big and unsustainable. It's so obvious that we're living above our means. Why are interest rates only 4.5% on the 10-year? Why? Who is? I always try to think that's another bit of a lesson learned.
Which with let's call 2.5% inflation is only 2% real. The price for risk is 2%.
Yes. So that's
so not only the rate's low, but the real
rate is maybe 2, right? Or 2 or 2.5. And another lesson learned, that was what Julian was so good at. I forgot to mention another thing he was great at. Whatever you argue, he starts by arguing the opposite. So on one hand, it drives me crazy, this, that. But on the other hand, he said, no, Philippe, you need to understand in any market, there's 2 sides to the market. So if you're a buyer, someone's a seller. If you're a seller, someone's a buyer. And so one has to really think like, why are rates only 4.5? Who is buying this thing? And the part that I find really interesting and that we're spending a lot of time on is in the early 90s, the debt to GDP was 60% and the internet came along. The PC and the internet were little intermingled, came along. People thought that the debt to GDP 7 or 10 years out would go from 60 to 90, and it went from 60 to 30. And what happened is actually productivity increased, and it went from 0 to 1% with productivity, and at the max, over 2% per year of the GDP was productivity. And when you put the effect of added productivity, more GDP, more revenues, then in a period of a boom, the government captures a higher portion of revenues than the non-boom. More capital gains, people make more money. So let's say that the government right now captures 17% of revenues. That's a bit what the government grabs of GDP. it can go to maybe 20, 21, 22 on an incremental basis in good times. Then usually in good times, more productivity, maybe a little bit less inflation, maybe a little bit lower interest, and maybe you don't increase your cost as fast, and you get this sort of incredible virtuous circle. And so my only explanation why maybe rates are not so high is people are feeling like, what if AI is going to create this kind of incredible productivity boom? And in fact, I think that the internet and PC, it was a great tool to make me more productive. AI might not only make me more productive, but if I don't start running a little faster, it might make me obsolete. And so that's a different policy. That is for the Harvard people to talk about, not for me. But I think there's maybe something like that. And another way I think about it is that the cost to protect for higher rates is also a bit expensive. I'm not the only one thinking about the cost for higher rates.
So
and I
hedging that away is very expensive.
It's very expensive.
Right.
And that also means to me, maybe too many people are thinking about that and not enough people are thinking about the AI benefits. And to that extent, the last thing I would add, and I know a lot of people may like some of the things the administration is doing now, or they don't like some of the things, and they're very polarizing things on both sides. But one of the things that I think is very fascinating is there's this thing called the diffusion rule. And to me, the diffusion rule is one of the most important policies I can think of. And it's not as big, but in my only world, I think about it like the Marshall Plan. And in essence, one of the things that Biden did that was very surprising is he said, AI is so important, we are going to keep the technology for ourselves, and we're not going to give it not only to our enemies, but we're not going to give it to anybody else. You're going to have to earn it, and I'm only going to give it to you drop by drop. The diffusion rule is to say, no, we, the Americans, have the best technology. We want everybody else to use our technology because that is the way to be dominating. And to me, it's much more obvious. And in essence, Trump went to the Middle East and said, we're no longer interested in freedom, we're interested in prosperity. And as a result of that, we now have this diffusion rule, and we're going to let a lot of people standardize on our platform. Now, I get that you may just say, well, we're not going to give this technology to some countries, but we're going to make it far more accessible. And for me, you know, as a foreigner, and I'll stop talking, sorry for this long-winded answer, to come to the US, I've always thought about what luck to have been through the education system, and I'm an immigrant, so there's other policies that I do think about. But America is the power behind innovation, and I think we're far closer, in my mind, to sort of the rejuvenation of America than to sort of the end of American exceptionalism. But again, I recognize that I'm seeing it in my own very little technological prism.
So one last question for you, which is something I didn't prepare you for, which is, well, when some young person who works for you who's working for you today, sits up here 25 years from now and talks about what he learned from Philippe, what would you like that to be?
I say, one, he learned that if you want to do well in the financial markets, you have to be a ball buster. I'm sorry to use that word, but I recognize that.
Well, having talked to a few people who work for you, you've done a very good job.
There's an aspect of this business is relentless. Like, God, these public markets, they throw an egg at you so often, and the cost of making other mistakes when you're running money for people. For me, the sense of fiduciary duty, it is so important. People have entrusted me their capital. The number one lesson is don't lose it. So I'd say that's, just, hey, it's a tough business. Remember, it's a tough business, but also try to really focus on the big ideas in the future. And remember that betting against the US, betting against innovation, betting against sort of like that, while the future is uncertain, it's most probably going to be interesting and better. that to me is at least what I try to remember.
So don't bet against America. Don't bet against innovation. And I would add, don't bet against Philippe.
Well, thank you, Glenn. I
Thank
really
you for
appreciate it.
joining us today.
Thank you very
Thank you.
much. Thank you.
Wow, that was fantastic. Thank you both so much for being here today. Just a quick peek at the next couple events coming up. On June the 26th, we have the author series webinar with a former CIA intelligence officer, Christina Hillsberg. June 30th, John Avlon, former senior political analyst with CNN, will be joining us about some exciting thought leadership he has to share. And we are still working actually on another event or two, so stay tuned. And of course, as we always do, we want to thank those members of the Centennial Society joining us today for their contributions, as that helps to provide the backbone for all that we do. So for those online, and there were many of you, thank you for joining us today. I hope you enjoyed it. For those in the room, please enjoy your lunch. Thank you.